Welcome. Today we are going to talk about how to make money with short-term rentals and to get big income tax advantages. Today I have Olivia Barrett available with us to join us. She's an expert in real estate and she's one of our trusted partners here locally to find great properties. And we're going to walk you through a few examples. So, welcome to Laugh When the Market Crashes. Those of you that have been longtime listeners know that it used to be called We Money Talk, and we're transitioning to coordinate with the book. So, thank you for joining us today. Let's jump right in. So, short term rentals, to give you guys an overview, if you haven't listened to some of the prior podcasts, it's a tax strategy that we also often use as part of what we call tax stacking, which is where we do more than one strategy to get really powerful overall benefits. Now, short-term rentals we're going to focus on today, and we'll mention a few things you can partner it with. But short-term rentals are Airbnbs, VRBOs, and there's a few basic tax rules you've got to understand before we jump into the properties. And those are, first of all, there's a 100-hour rule. And that 100-hour rule basically says that you or you and your spouse, you have to collectively get 100 hours in the year that we're looking for the tax advantages. And the tax advantages of a short-term rental, if you meet the rules, will allow you to deduct the depreciation against your ordinary income. And then we'll do acceleration techniques called cost segregation analysis to make sure that small deduction could be about 30% of the value of the property. So it's very powerful, but you got to make sure the rules are all satisfied. So that 100-hour rule is key. And then nobody else can be putting in more time than you. So we can walk you through the details of the tax rules, but to give you an idea of the benefits, we're going to look at some strategies and we'll give you an idea of roughly how much we can write off in the whole bit as we go. So Olivia, thank you for joining us today and welcome to Laugh When the Market Crashes podcast. And wanted to, first of all, just see if you could give a little bit of a background as to your approach to real estate in general in the greater Northern California area and what your team of realtors, how you go about finding good value and good investment properties for clients.
Sure, absolutely. Thanks for having me. So I'm Olivia Barrett. I am with Guide Real Estate. I run a team of 8 ladies. We sell about 100 houses a year. One of the things, though, that we specialize outside of normal real estate is real estate investing. So started off in the flipping primarily. I flipped over 140 houses at this point over the last 15 years. And then we've had to evolve with the market. So right now we're still doing some flipping. It's come a lot harder for us to find those correct margins to flip in. So we've been pivoting a little bit into more of long-term holds. And that is rentals and also Airbnbs. So, you know, and that's kind of what's been important over the last decade and a half of investing is to be able to have the pulse of the market, be more aware of the changes that are coming and being able to pivot with it. So every time, even if we're looking at something in the terms of a short-term strategy, such as flipping, we always have our backup option of a long-term hold, renting being one of those, Airbnbs another. We also do a hybrid of that, which is a furnished rental option as well.
Yeah, and
So
one of the
we
things
focus on. We do kind of everywhere. We have specialized in Sacramento, Yolo, Placer, El Dorado, and then I have a team out in Solano County as well.
Great. One of the things that I found really attractive about your approach and your team is how you bring services to the table beyond what a traditional realtor might. So talk a little bit about how you'll find properties that maybe you can increase the value right out of the gate and how your team and your contractors, your resources go to work for the clients to make it as turnkey as possible.
Sure. So whenever we're looking at a property as an investment or even just hitting the market, what I do is come into the property and analyze it. I'll give a value of the property in its current state, and then I will give a value of the property if we were to do some changes to it. The changes that we primarily do is flooring, paint, countertops. Those increase the value of the home. We're looking at anything that is going to do at least a 2-to-1 ratio of what we're putting into it versus what we're getting back. Used to be a 3-to-1, but prices have gone up a little bit. So now it's more of a 2-to-1 ratio. Those are the things that get us the most back. But we can also help clients do those, mechanical things that you're not necessarily seeing. So you're not getting that 2-to-1 ratio necessarily, but it does allow you to have a lendable property. And it is those things that come up in inspections as well. So we do have a full crew because we flip. We have full contractor crews that do all of the work. We've been working with pretty much all the trades for over a decade. And we're very fast. So we're in and out usually within a couple of weeks when we're preparing a house for the market or when we're preparing it for rentals. Flips take us about 3 months to do because there's the whole permitting process and everything. Because I started as an investor myself and did the flips myself, I always do the full process for my clients. Very rarely does a client go off and do their own and have their own crews, although I do have some clients that have that. So I am accustomed to coming in and designing, running the crews, pulling the permits, and handling the scheduling and budgeting for the client.
Yeah.
So that's kind of what we do. We also offer staging services. And so I own all of our own staging. We physically stage the properties ourselves. So there's no cost associated with that. So in these cases, when we're looking at furnished rentals or Airbnbs, we can assist with that process as well. We wouldn't be using my staging furniture, but we would be helping the client getting the property ready for an Airbnb.
Yeah, the key here as we go through for the listeners, you got to keep an eye on the 100-hour rule. So as much as you want to use Olivia and her resources, we got to keep them less than what you're doing. So you will have to be involved or should be involved in some of the furnishing and some of those things that Olivia could do. You might do yourself because you got to meet that rule. And under tax law, the key thing is you got to actually do it. You don't want to be afraid of an audit. These are powerful things. So a lot of times people will say, well, the IRS isn't going to check. No, be ready for them to check. We're going to show you how to save, hundreds of thousands of dollars potentially. Do it right. It's easy to do. It's just a matter of making sure you get the hours in. So you got to have that right balance. So as we go through, let's jump right in and we'll look at a couple examples and we'll talk about how the rules apply and what some of the deductions that you might get as we look at a few properties that Olivia has prepared. So I'm going to go ahead and share our screen now.
Yeah, and just to piggyback, Terry, on what you were saying, in those situations when we're trying to meet that 100-hour mark, we would step back into more of an advisory role. And one of the things that takes so long and that's hard is when you're trying to just find a contractor and you're searching online, you're looking at reviews and all of that. So those are things that we can give referrals and that will cut back on all of that back and forth that you have to do. But I will tell you, anybody who's ever tried to get furniture for an entire house and fully stocked, that knows the amount of time that takes. So you can meet your 100 hours doing that for sure.
Yeah, my wife and I did a property in Tahoe year before last, and probably the shopping alone, because she dragged me along to do a lot of it with her too, even though she has better taste than I, so it was her choices that we went with. But we probably got 100 hours in easily for that. Now, in her case, we're going to talk about short-term rentals. In her case, she did so much because she basically acted as the general that she became a real estate professional that year. So she got well over the 750 hours are needed for a real estate professional. But typically, the 100 hours is going to be easy. It's just making sure that you're nobody else is putting in more than you, but you'll be able to get there quick, as Olivia points out. And they're going to want to rely on you, Olivia, as much as possible. Nobody wants to find a contractor that you're not familiar with. So just keeping an eye on that balance, but you can rely on Olivia and her team dramatically to cut your time and headaches as we go through these.
And
so I got the
we use Google Sheets for that, just as a
yeah, we have tools set up for them. I think some of them we've shared with you on the tracking that Matt created, but that's in the program. It's all very systematic for the clients. So this is 327 Drummond or what is it? Drummond Street in Nevada City. I assume that's Drummond Street. So why don't you walk us through this one and give us an idea why you like this one and how it might work for a short-term rental?
Sure. So first, when we're looking for short-term rentals, we're looking in areas that meet a few criteria. So the first one is we're looking at a friendly environment in terms of regulation for short-term rentals. It has become a lot more restricted in areas recently, and I mean fairly recently, like within the last year, we've seen a lot of shifts. Some areas that I could say just in general, Tahoe has become extremely difficult to do Airbnbs in. There are certain areas that have some left, and we'll talk about one of those later. But we look at that. Nevada City is known for being very friendly and welcoming of short-term rentals. They get the majority of their income off of the occupancy tax that they charge for these properties. And so they make this a very easy, streamlined process to get permits in that area. The other thing that we look for is an area that is heavily frequented by visitors for whatever reason. And so Nevada City actually holds over 1,000 events per year. And so they have a lot of visitors coming in and out of that area. Therefore, their occupancy rates are a lot higher than other areas. So when we are analyzing areas and properties, we are looking for occupancy rates of other short-term rentals in the area. We are looking for what is that draw to that area and whether or not it's seasonal. So some, again, using Tahoe as an example of that, obviously they have a lot of traffic during, the winter months during the ski season. And then they have kind of a void and then they pick up again in the summer months. And so we look at seasonality as well. In Nevada City, those events are spread out evenly throughout the entire year. In fact, some of their most popular events are at the very end of the year in December for their Christmas
Yeah,
and
we go
also
up
for
there.
New Year. Yeah, so they have a heavy drop. So that's one of the things that we look for. This particular property is within walking distance of where the majority of those events are being held. So walkability is a big deal for people looking for Airbnbs and will increase your occupancy rate. This particular property also had the opportunity for a second unit downstairs. And so when I look at that, I look at not just one potential source of revenue, but two. So those are things that we can maximize and increase profitability. So this particular one I thought was an interesting property. It has character, so it makes it stand out as opposed to others on an Airbnb platform. It has that walkability, it has that draw for the events, and they are friendly in that area towards business owners.
Great. And just looking at some of your numbers, you've got a positive rate of return even with a mortgage. So with the mortgage is typically how a lot of our clients will ultimately buy these because it reduces your risk in buying real estate to some degree. Um, and it meaning if things go really bad, like 2008, 9, and 10, where things got really bad and you had to walk away from the property, you have less at risk, of course. But it also increases your returns if you can do it positively, meaning if you've only got 20% in and you're making 4% on the property after paying your mortgage expense, you've only got 20% in, so you're really able to make 20% on your 20% down payment. So the returns can really skyrocket once you factor in a good cash flowing property with a mortgage. Now you have to be careful because debt cuts both ways. So when property values drop, that amplifies your losses too. So selection of property is absolutely key.
We were talking offline about that too, about some of the tax benefits as well. When you're looking at when we're running these net cap rates, is what we refer to them as. Um, some of these things that we are counting against the revenue is actually going to be tax write-offs. The interest, for
Yeah.
example, on these mortgages. So
Yeah, so let's look at that from the short-term rental strategy standpoint. So we've got a purchase price here of just say roughly $700,000. How much of that we're going to be able to get through cost segregation is going to vary based on the property type, the construction, and a number of factors. But as a rule of thumb, roughly 25 to 30% will be able to get what's called bonus and accelerated depreciation in year one. So if we are able to hit 30%, that's a $210,000 write-off against your ordinary income taxes. Now, this is what is so highly motivational to a lot of clients that they really need a write off. And by doing this, you're de risking the investment to some degree because that write off is going to translate into real tax savings for you. So if you get a $210,000 write off, depending on your bracket, that might be $80,000 in tax savings next April 15th. So this can be really powerful from that standpoint, but I want to caution listeners, don't ever buy a property just because of the tax benefit. And what I mean by that is if you wouldn't buy this property without that $80,000 write-off, you shouldn't buy the property because you're going to make your money in real estate when you buy. Those of you that have talked real estate with me, you know I'm not a big believer in buy and hope. You want to find a property that you use like Olivia's team and you add some value right away. And then you've got a clear path as to how you're going to make money, a clear path as to how you're going to exit down the road, which we haven't talked about yet, but we've got to have an exit strategy on these ultimately. And hopefully a good cash flow along the way that's either positive or at least break even. And even at break even, you're making money because they're paying off your property. Um, but this looks like a really good potential candidate from what you've told me. And the area is great, especially in Christmas time. We love it up there. Um, as far as the net here, you're estimating about 4.5% net of mortgage. So even though we are in a property with a mortgage, you've got 31,000 of profit is what you're estimating?
that is net. So your gross
Net.
is 79,000, but yes, net after mortgage, 31,156.
Yeah. So, and if you're putting down 20%, you're only putting down 140,000, you're making 31,000 a year. That's a huge rate of return, well above 4.5% on what you've actually put down. So that's 4.5% on the property, not on the actual investment.
Good point.
So with $140,000 down, that's a phenomenal property. Now these are of course stats. You've got to have a property that is a winner because there's going to be properties in Nevada City and everywhere else that they're looking at the same stats of occupancy of 59%. Some of them might be at 20 or 30 because they're not the best located or not the most attractive property. And some might be at 75 or 80 because they are the ones that everybody wants and they rent first. So there's still a lot of art in how you do this. And that's what Olivia's team is so good at is helping you find those that are going to be successful. Anything else you want to add on this property, Olivia, before we look at the next one?
No, I just think your last point was so important. Whenever we're looking at something in terms of even flipping, and we're looking at the after repair value of it, when you just look at comparables, like for example, Zillow runs an algorithm, and so they'll give you a Zestimate of a house, and you really have to take that with a grain of salt because that is what just the average of what has sold around it. They don't know that some things are very neighborhood specific. We're going to talk about an area like North Oak Park in a little bit, and that, has Stockton Boulevard being the dividing line where you cross that line and it's at least $100,000 difference. And Broadway is another one of those, big streets that when you cross that, a value can drastically change. The algorithm doesn't know that. So it's important that when we're analyzing these properties, we're really looking specifically at those sub neighborhoods and making sure that we're being realistic about what properties we're comparing it to, what properties are getting an average daily rate at a higher amount or occupancy rate higher, and that we're comparing truly apples to apples, because it can make a big difference.
It's
And
a
then having
huge
something that
difference.
stands out, one of the things that sounds silly, but having a foosball table, having a pool table, having something that is just fun, actually increases your occupancy rate and your average daily rate more than, fancy countertops, on these type of properties. So just knowing that and kind of speaking to your audience in those specific areas is great.
Yeah, and as a consumer of Airbnbs and VRBO, our family, as many of you know, is crazy big. With there's seven of us because I have five children. We look for exactly what Olivia is talking about. We want some entertainment there. If you're going up in the mountains, we want a hot tub. We want certain things to entertain the kids and to really enjoy the experience. So I think you're right on target. Um, as far as the location, so the area that Olivia is talking about, those of you that aren't familiar with the Sacramento area, one of my best purchases I ever made was exactly because of what you're talking about, where a bank listed a property and it was within a few blocks of an area that wasn't so good. But this was across the street in a great area. And I picked up a house for 70,000 that should have gone for 150 or more easily. And then we got it at the bottom of the market. So it went up and we did great on that one. But knowing the neighborhood, being very local is absolutely critical when you're buying a house. So completely agree with what you're saying. Let's try to be able to hit on one or two more. I do want to make sure we hit on Tahoe. So I'm going to skip to that one next.
Yeah.
Because this is
Sure.
an area a lot of people love the idea of getting a property. So, why don't you go ahead and tell us about this one?
Sure. So there's only about three places in Tahoe as a whole that has permits left. And there are other restrictions associated with it too. But Kings Beach is one of those. At least at this very moment, it has
Yeah,
left. So this one is in that area. It's within walking distance of the beach and a lot of shopping. So it's an ideal location in that sense. And the unique part about this one too is that it was recently updated. So pretty turnkey property, and it has an attached studio. So again, two sources, potential sources for income. You got to be kind of careful of renting them at the same time, noise and all that. But it does have that opportunity. When you look at the numbers, it's projected gross revenue of about $128,000. And when you take the mortgage off of that, you're still netting about $37,000 a year. So it's got good potential. Obviously, it's an area that's going to appreciate at a higher rate than others. And that's one of the things that we look at as well when we're looking at long-term hold strategies is obviously the value of that appreciation in that area. In some areas, it's just higher than others, and this would be one of those areas,
yeah.
particularly because when those permits go away, that becomes even more valuable.
Absolutely. And the nice thing here, so one of the other key rules of short-term rentals is the average stay has to be 7 days or less. And this is an area where people will come in for a weekend or they'll come in for a week or two. And it's easy to maintain that average of 7 days or less. And you got people constantly coming in and out because 66% occupancy is pretty high if you're just renting for the weekends. So you got to get some week rentals in there for sure. But with a $37,000 net revenue, even with a mortgage, even if you were 20% lower, you're going to be positive cash flow. So you've got to make sure that it's attractive because there's competition in a lot of these nice resort areas with hotels as well as Airbnbs. But there's scarcity, as Olivia is pointing out, in an area like this, which is perfect. Um, I think for this one, you're probably looking at in the neighborhood of $300 to $350,000 write-off against your ordinary income with cost segregation analysis combined with the short-term rental. So this is an area, this is where my wife and we did one on the other side of the lake on West Shore. And in ours, we did a very huge remodel. But it was one that because of what was being done, we were able to get a very large write-off. And this one is going to be similar given the price. Now when you're estimating what the cost segregation analysis is going to give you, you have to take out the price of the lot. So some areas lots are quite expensive, which can bring us closer to 25%. As far as cost segregation, giving us the upfront write-off, but even that's going to be about 300,000 on this. So one thing I want to bring up on this one, because it's a nice number, meaning 300,000. So somebody buying this house has probably got some good money in their retirement accounts, IRAs, 401ks, and things of that nature. We can often just take this as a deduction and offset our income. So if you're making a half million, million a year as a physician, this can help alleviate some of your taxes, but it can also be spent a different way with what I call tax stacking. And that would be instead of taking the deduction and the tax savings this year, maybe we're converting your IRA to a Roth IRA. And now this 300,000 of your Roth IRA conversion is tax free for the remainder of your life and another 10 to 11 years thereafter. Combine that with a further strategy, which we do a discounted Roth conversion strategy, and we might be able to convert almost 500,000 with this property and pay zero taxes. So we often call this a zero tax Roth conversion strategy, and you're combining about two or three techniques to get there. So this is a perfect property for tax planning that will help you both short, intermediate, and even lifetime tax bill, get that bill down as low as possible. Um, Other things here. So the occupancy of 66%, is that really achievable in these areas? So are they really renting just about every weekend and then some weeks, or what's it like seasonality wise up there?
They really are. I mean, there are some heavier, focus, there is some seasonality in it for sure. But yes, they really are. When I'm looking at these, I'm only looking at properties within this neighborhood. And so these numbers are very accurate for this property.
And I kind of laugh. I mean, I was trying to give you a little bit of a softball because we love Tahoe. We're close to it. And there's a big argument. Is it better up there in the winter or the summer? And you'll have
Yeah.
people that they just absolutely love the summers up there and the springs, and some are they're there for the skiing and hitting the slopes. Tahoe is such a great area for Airbnbs and for VRBOs and even for long-term rentals. So let's talk about that. So one thing Olivia and I talk about offline, but we haven't hit on in this podcast yet, is a backup plan. So when we do these, we've got to have a property that makes sense, that looks like it's going to cash flow well. But if things go bad, I mean, let's say for some reason this Airbnb just isn't working out, then we want to look at it from a full-time rental standpoint because you can always switch it over the year after you got your tax advantage and say, you know what, I'm going to do a full-time rental because this just didn't pencil out the way I wanted. So maybe comment a little bit on that as to how you look at fair market value rents and the demand as a backup plan, just in case the Airbnb doesn't work out for a given client.
The majority of all other areas that we focus on would have that good backup plan in terms of having it at least be a wash when it comes to turning it into a long-term rental. Tahoe is an area where it gets a little bit challenging. They don't get as high in long-term rent as they do in these short-term rentals. They just are not as profitable. So in this specific area, there are some areas along the coast as well that we're analyzing right now that's going to be the same kind of a situation. So those, in terms of a backup plan, it might just be selling those and not turning those into long-term rentals. Whereas all the rest of them, we look at those as the backup plan of long-term rentals. But again, in these areas, for example, Tahoe and anything along the coast, which they're very, very heavily regulated. So hard to find anything outside of those heavy regulated areas. But when we do, those appreciate at a higher level than anything that we're seeing in Sacramento.
Yeah.
And so selling would be a good strategy in those cases.
Yeah, so in the first property that we looked at in Nevada City, it would probably cash flow much better if you had to do a full time and at least get to break even. Here, and this is part of the decision making. That's why I brought it up on this property, not to make it hard on Olivia, but this is an area that a lot of people want Tahoe, and you got to understand the pros and cons because it's a great area to have property, but there's a separation between fair market rents versus what it's worth as an Airbnb. So your backup plan should always be in place before you buy a property. Now, here, the backup plan, as Olivia said, might be I'm just going to do a tax-free 1031 exchange into another property that is more suited for full-time rental. Or with this property, maybe you're going into two properties that would be suited for long-term rental. And that's if it doesn't work, but this happens to be a great area for Airbnb. So I think your chances of success are quite good if you've got an attractive property with a good location. The
Especially
other thing I
because it's
wanted
so
to,
heavily regulated. So there's so few of them, it's
yeah,
not
the
like
scarcity
you
is
have the
going to bring up the
competition.
value. The
Mhm.
other thing I wanted to point out here from a tax planning standpoint, we've got a number of clients that they love the tax strategy. They also want a property they can use eventually. And sometimes they're really wanting to buy this property that they want, but it may not be the best Airbnb or full-time rental. And sometimes it's better to do a few Airbnbs in great areas with the idea that you 1031 it into a rental property that you'll ultimately remodel and use as your second residence or whatever your long-term goal is. So you don't have to start with the property you're going to end up with for that dream second retirement home. You can do a few steps and you can probably get better results by doing that. And I don't think Olivia minds because her team will help you buy a few properties along the way. So
No, it's a
those
good
are
strategy because I think that the tax benefits are so strong, like you said, primarily in that first year, first and second, that doing that and just kind of focusing on maximizing those tax benefits initially, and then 1031ing into something that maybe fits your family more and for more personal use later.
absolutely. So let's talk about the exit for a moment. We have clients that will keep buying up, so they'll get bigger and bigger properties. They'll do cost segregation each time. But when you do a 1031, your tax basis goes with you. So each time your benefits are going to be a little bit lower. But ultimately, some clients don't want to own a ton of real estate when they retire. So we have a lot of real estate families. So they're going to do what we call swap till you drop. And that means they're doing 1031s to get in the properties they want. And then they're going to keep them until they pass away. And then we'll get a step up in basis for the surviving spouse. And we can do this again. Or it goes to the kids and they can do it or they can sell it without capital gains. So swap till you drop is very powerful, but some don't want to manage real estate when they are older. So we have other techniques through charitable trusts. We can sell them tax free. We can do installment sales. We can do deferred sales trust techniques, meaning 1031 into like I have one where I own part of an Amazon warehouse because I ended up making too much, happened to be in Tahoe. So I had what was called boot unless I rolled it into another property, which I did. So a lot of exit options, but as we create a plan, we want to look at what are we doing this year and what is the ultimate exit plan long term so that you have a path. And you can always pivot, of course. You may love being a renter or a landlord and you may want to hold them till you pass away, but initially you had thought maybe you were going to do something else. But having that long-term plan, I think, is key. So do you want to look at one more and then we'll wrap up?
Sure.
Do you have a favorite or do you want me to just choose one?
Um, I think Folsom's interesting. I would just say I'd like
I
to
think
talk
that's the
about
third one we have.
one that's not even on here, just an
Okay.
area wise. There's an area around the UC Davis Med Center for those that are from local from the area. There's a cluster of kind of sub communities around the Med Center. So there's North Oak Park, anything above Broadway. There's Elmhurst on the other side of Stockton, anything above Broadway there, and Tahoe Park. So those properties, talk about areas that we focus on and have designated as a really great area for short-term rentals is that area. And it's because of the Med Center, not only for what is there now, but the growth of what's happening over there right now. And they are expanding the Med Center and trainers in that area. And so we look at master plans for communities to try to see where the city is focusing some money, where new development is coming into, because we're not just looking at profitability in terms of a month-to-month thing, and obviously we're looking at the tax strategies of that too. But the appreciation of the house is such a large part of why you buy real estate, that we want to make sure that the areas that you're purchasing in not only works for you short term and monthly wise, but also in the long
Yeah.
term picture. So that's an
Yeah. And
area
you,
where we really like because it
yeah.
hits both of those areas.
Well, and here we have to do the short-term rental strategy, but you also have a backup strategy or for year two as to how to get great rents. So I won't steal your thunder there, but tell them about what the plan is maybe in year two, because you gotta do the 7 day average stay or less in year one. But in year two, what are the other options if you don't want it always to be a short-term rental?
Yeah, I mean, you can do a normal long-term rental, but in that area, you'd want to do furnished finders, for example. So those are more for your traveling nurses,
Yeah.
corporate rentals. We see more of the corporate rentals in more like Midtown area, but still that's considered an extension of the grid. So people who do work downtown will rent in those areas. But primarily, we get really good rents from furnished finders, which are your furnished rental properties to traveling nurses.
Yeah.
And they
It's
have
it's
a
a great option.
they
What's
get a
that?
per diem, you know. So and their per diem is pretty good, and so
Yeah.
it works out well in those areas.
Yeah, we had a client that bought a lot of homes in Hawaii near the base. Now, this wasn't for short-term
Oh,
rentals, but
yeah.
that was just their strategy as a real estate professional. And it was just everybody coming in, and they always had great tenants. They had a military background, and it worked out really well. You get hit really hard if they close a base. You got to be careful, but that's having niches like this. And this is one you had told me about. So I want you to share that it's just a great idea because short-term rentals you're going to yield more. If you run it well, you're going to make more, but it's more work. So ultimately, sometimes you'll do it for a year or two or three, enjoy the income, and then you want to say, let's make this easier. And then you've already got a turnkey approach. So I think that's a wonderful area to explore.
So talking about bases, Travis Air Force Base is actually a great one. We have clients that buy a lot of rentals in and around Travis Air Force Base.
Yeah.
They give a pretty good stipend for them as well. It's usually anywhere between $3,000 and $3,500 a month. And so finding those little properties that directly surround Travis Air Force Base is a good strategy.
Yeah. Well, anything you want to add on the short-term rentals, Olivia? Otherwise, I think we gave them a lot to think about, and I appreciate you
Yeah.
joining us on the podcast today.
Thank you so much for having me. I appreciate it. And I look forward
Well,
to working with everybody.
yeah. So please like and follow and all those wonderful things. If you want to reach out to Olivia, you can reach out to her directly. Do you want to give a website or phone number where they could best reach you, Olivia?
Sure. Teambarrettrealestate.com is our website. We also do all of the social media. But reaching out to me directly, I'd love to have a conversation or a cup of coffee to discuss short-term rentals.
Excellent. And I would highly recommend her. We're using her with a number of clients. They do a great job. So anybody that needs that, she's got my recommendations. So
Thank you.
again, thank you guys for joining us. We'll look forward to seeing you on the next episode. And if you need any help on the tax planning front, short-term rentals, please reach out. We'll be glad to get you started. So have a wonderful day.
Thank you for listening to Laugh When the Market Crashes with Terry Wheeler. Be sure to click the subscribe button to be notified as new episodes become available.